Welcome back to Tax Fun with Taxium, where taxes are fun or at least slightly less painful. I'm Amanda, and I'm joined as always by the incomparable Ronald.
How did you even try?
Yeah, exactly. Now, have you been following? Oh,
Wait, are you still
sorry.
subscribed to your high school SAT email list, notification list? Is that where you got that word
Absolutely
from?
not. The incomparable?
Yeah, your fancy words.
I have a big vocabulary.
Good for you. Sorry, what were you going to say?
If you've been following along with our series, and if you haven't, go binge those earlier episodes. We've talked about Nexus, registrations, backfiling, VDAs, and even tariffs. Whew. So what's next? Well, once you know that you have Nexus and you're registered, the next logical question is, how do I figure out what sales tax I need to charge? That's today's theme, how to assess sales tax. It sounds simple. Spoiler, it's not, but we're going to make it manageable, maybe even a little fun. Are you in?
Yeah, I can't commit to the fun part, but we'll give some good information out.
Oh, we're always going to have fun.
We're the most fun. Two monkeys in a barrel. It's great.
Absolutely. Okay, let's start with the big picture. What does assessing sales tax even mean? It's not just looking it up and charging a flat rate. It's about determining what's taxable, at what rate, to which customers, and in which jurisdictions. So, Ronald, here's a starter for you. Do you remember the first time that you had to assess sales tax manually?
Yeah, years ago, starting at Avalar as part of their training and onboarding stuff, as a person newish to the tax side of things, I hadn't really thought through if I was doing this manually, what would that look like? I was just kind of used to being the customer, the recipient of taxes. So I would just get an invoice or a bill, look at the tax line item, and be like, okay, whatever, this is what I owe in tax, I'm just going to pay it. But being on the flip side, I never thought about how do they get to this $3 due in tax? And then how do I know it's accurate? And so I got some exposure to that, maybe way too much exposure. It's a very painful process. And it's not painful because it's difficult. Nothing we're talking about is rocket science. It's painful because of the tedium, right? Mm-hmm. You have to go through and define what you're selling. You have to then understand the specific state rules. Am I taxing based on the state, based on the jurisdiction, based on a combination of both? And then once you understand all the rules, the math itself is simple. 5% tax, 2%, whatever. But it's just the process of getting to that number that becomes a little difficult and sticky at times.
Yeah. What surprised you the most about that process?
Just the variability. I mean, depending on the state, the jurisdiction, some things are taxed differently in one city versus the next, one street versus the next. There's so much nuance between products and items, software as a service versus the supporting of software as a service, a one-time purchase of a software thing versus a recurring purchase, bread, food items, clothing items that are being worn, fancy things over a certain price point, clothing items under a certain price point. There's all kinds of little weird nuance things. It's who knew that there was so much involved with getting something taxed properly?
Yeah, absolutely. When I first started working at Avalara, they had this map where you could see every single taxing jurisdiction in the United States. Mm-hmm. And that was bonkers, for lack of a better word. I think the most surprising thing for me personally is that your next door neighbor could have a different tax rate than you do, depending on where they fall on that line.
For sure.
You gotta love making things way more complicated than they need to be, right?
Mm-hmm. And I'm glad you pointed that out, because for the consumer, for most of us, we don't have to worry about these things. We're going to assume that the bill we received has been properly taxed. And most of the onus is on the business, if push comes to shove, to prove why they assess tax in a certain way and came up with a certain result. But yeah, you got to make sure all this stuff is done exactly right. Because like Amanda just said, it could differ based on a few feet or a few, things that may seem small, but have a big impact on the sales tax.
Yeah. Okay. So to move things along, The first question when it comes to assessing sales tax is what are you selling and is it taxable in each state where you have nexus? So let's break it down. Are you selling tangible goods? Are you offering digital products? How about services? Because guess what? Taxability varies wildly by state. So for example, software as a service or SaaS is taxable in some states, but it's exempt in others. Maintenance plans are sometimes partially taxable, but sometimes they're fully exempt. The shipping, oh boy, that's a whole rabbit hole. So do you have any favorite examples of weird state rules? I feel like New York and Texas are always good for something bizarre.
Yeah, I think we'll take a slight step back and, you brought up some good points. And I think where businesses want to start is, how do we approach assessing sales tax in general? And you hit on some key points there. And I think the first thing is just to, like we talked about before, commit to doing it right. It's going to take some time to dig into things and make sure, but don't give up. If you need help, we're here, other folks are here. But that's step one is committing. Once you've committed, and then you understand that you're playing on the state's playground, step two is to go understand their rules, right? I look at this from the perspective of an audit. Because sales tax in a lot of ways can be an honor system. You're not going to get an audit on every single transaction and every single return filing you do. But if you ever do get audited, the way that works is I normally take a sample transaction or handful from some period in the past. They'll look at it and say, great, explain to us why on these 5, 10, 100 random invoices, how and why you assess tax in this way. And then hopefully you've done things in a way that makes the explanation very, very easy, which we're going to talk about now. But the point of doing all of this, what we're talking about, is just to prepare you for that moment to make sure that, if you get questioned, you've got clean understanding of why things were done. So like Amanda pointed out, kind of the first part of that is, one, you want to look at, should you even be assessing tax in the state in question? Just because you're selling into Texas doesn't mean you should be assessing tax in Texas.
Right.
So first step is, do you have nexus in that state? Should you be assessing tax? And if so, maybe the next step is going to be, we'll look at the taxability of who you're selling to. If I'm selling to you, Amanda, and you have an exemption certificate, I'm not really worried as much about the sales tax because you're going to be reselling it and you're going to be assessing the tax. So I got to know, what are you doing with it? Are you the end user? Are you going to resell it? And then from there, we're going to look at the taxability of the product or the thing you're selling. Whether that's a product, a service, shipping, whatever those line items are on any invoice, the state's expectation is that's going to be assessed individually because all these things vary one by one. Shipping may be taxed differently than support or software or a pencil or a picture of Britney Spears. So, you have to go through and make sure you're accounting for each of those line items to make sure that you're assessing that individually properly. That's kind of the high level.
Yeah. Absolutely.
Oh, you want to go deeper in?
Yeah, let's go deeper.
So here we go. So after you've kind of done that little 3-step approach there, when it comes to the taxability, the specific thing you're selling, that's its own little rabbit hole. Because it's not just that, hey, I've determined that I should be assessing tax in Texas. I've determined that Amanda isn't giving me a resale certificate, so Amanda's company is taxable. Great, I'm going to charge them, 1% in Colorado or 2% in New York or something. You're then supposed to have an understanding of what you're selling in relation to that state or jurisdiction specific rules, because in some places, software is not taxable. In other places, it is taxable. In Texas, it's taxable at 80% of the standard rate. So you've got to know, is it taxable? And then at what rate per that jurisdiction, do that per line item. That's going to give you a total number. But, when it comes to assessing and then filing, you've got to have a deep understanding of the total number and then the breakdown of that number to make sure that if you're responsible for paying Texas and Austin or Colorado and Denver or Louisiana and one of the parishes, that you're attributing those dollars properly when it comes in.
Yeah, absolutely. So the bottom line is your product category needs to be mapped to tax categories, and each category might be treated differently depending on the state.
And you're leading us where you want to go. So it's like, once people have understood the general strategy behind all this stuff, how to operationalize it is the next question. And so that's kind of why companies like Avalara, Vertex, Sovos, all these places exist, because trying to manually track all these product categories and match them to state tax codes and state rules is an absolute nightmare. I mean, how many jurisdictions are taxed that tax like 13,000 or something?
Oh, I think there's many more than that.
Right. So it's like, each of them are going to have their own set of rules around how many products they've defined. So it's like 13,000 times that. Who the heck can track all that?
Yeah.
So for most folks, I mean, I don't want to get too far ahead, but yeah, it becomes a question then of how to operationalize it. But yeah.
Well, moving forward, once you know what you're selling, the next question is, where are you selling it? So this is where things get spicy because, like you said, it's not just about states. It's about states, counties, cities, transit districts, special tax zones, all stacked up on top of each other like some sort of bureaucratic layer cake.
Oh, you're making me hungry. That sounds tasty, but it'd make you sick after the first bite.
Yeah. So, I mean, you did mention Denver. So have you ever tried to manually calculate tax on a Denver order?
Yeah. And this is one of the 1,000 ways tax becomes so complicated. Having worked with clients doing business in Colorado who live in Colorado, and those folks who don't live in Colorado doing business, into the state, nobody knows how to do this stuff. The state's so nebulous in all these things, but basically Colorado's expectation is once you hit Nexus in the state, whatever way you hit Nexus, physical, affiliate, economic, or otherwise, you're both supposed to get registered at the state level and then also do your own little mini self-assessment to see which jurisdictions in Colorado you're selling into. And then you're supposed to then make sure you're complying with those jurisdictions' specific rules as well. So when it comes to sales in like Denver and Colorado and stuff, looking at all the state level stuff to see is is software taxable, whatever you're selling. At the state level, it may or may not be. Great. Let's look at the Denver level now, because it could be a totally different answer. Is software taxable in Denver? Great. Like I may have mentioned all the special taxes, all those other things, take all that into account, and it just becomes, again, very simple math, 2%, 1%, 4%. It's just getting through the weeds to understand when you apply that percentage, where and how much. Wow. So easy math, but it took, to do it right, takes, 5-10 minutes of digging into stuff per line item, per invoice, which is why most folks don't do it right. They end up just kind of guessing. They'll Google something. Oh, well, I just saw that, software is 4%. I'm just going to plug that in as a flat 4% charge for Colorado. And it's going to be fine.
Yeah.
But that's never the case, because the numbers are off. Because when you go to file those returns and you put in those sales and the jurisdictions, it's going to ask you, where did you sell into? Was it Denver? Was it this Colorado Spring? Was it this place? Was it Louisiana? Whatever it was, you're going to fill it in, and their system's going to prompt you to make sure that you're being, accurate in your filing stuff. So if you haven't done it right up front, it's not going to match with the state. It's already programmed its systems to expect.
Yeah. And another thing to think about in that same vein is tax rate sourcing, because you need to know the destination-based sourcing rules, meaning where the buyer is located usually determines the tax rate. But of course, because it's typical, not every state follows that rule. Some are origin-based. So the next question for the listeners is, do you know whether you're in an origin-based or destination-based state? Because if not, you should probably look that up.
For sure. And that kind of points us back to how do folks operationalize all this stuff? Because there's so many parts and pieces that unless your company is big enough to have 2 or 3 or 4 dedicated tax lawyers, tax experts, it's just not fair for any one person to be able to maintain and corral all these things manually.
Yeah, you actually jumped ahead on me a little bit, because my underrated question next was, should you even be the one that's assessing that tax? So some businesses act as a marketplace seller, and if you're selling on Amazon, Etsy, eBay, or similar platforms, the marketplace may collect and remit sales tax for you, which we have already covered. So you might not be responsible for calculating the tax at all for those transactions, at least. But if you sell on your own website or through Shopify or via invoices, that responsibility is yours. So Ronald, what do you think the biggest myth people believe about marketplace and tax liability is?
Ooh, great question. We're going to come back to it in a second. I wanted to circle back on something you just said. So a lot of folks are be looking at assessing tax. We're talking about doing it manually, which in my head is like an Excel or a spreadsheet. But lots of folks are using a QuickBooks or a Shopify or systems to do this stuff. And none of these systems, while they all can have the capability of calculating tax, they're not going to do it for you right out of the box. It's usually going to require some kind of manual intervention. You're going to have to go in there and type into QuickBooks that Colorado is 7% or something. So just kind of be aware that whatever system you're using isn't designed to tell you what to do sales tax wise. It may make it a little easier in some ways, but you really have to be surgical with the information you're giving it when it's assessing tax. Because if you tell it 7% for Colorado, it's just going to do that for every Colorado transaction, not knowing that Denver's portion should be different or non-existent or more because of the specific rules. So just keep that in mind. That again, software is your tool, but somebody's got to make, own the decision on how these things get applied and put in.
That is a fantastic call out.
Hey, thanks.
I think that is something both of us have seen time and time and time again of, I bought it, why isn't it working?
Mm-hmm. And that leads us back to the marketplace question. So in general, with some of the changes in laws over the years, marketplaces, companies that identify as marketplaces, Amazon, Walmart, to name a couple, they are responsible for paying the state the dollars on the sales made through their marketplace. They are not responsible for owning each individual company's compliance. So that's probably the biggest myth, is that because Amazon is paying the state the dollars, my part is done. But that's not true. Most companies, all companies, if they have Nexus in any of those states where Amazon is collecting their dollars, if they have Nexus through Marketplace or any other Nexus, they're supposed to be filing returns.
Mm-hmm.
Filing returns isn't the same. Doesn't obligate you to pay dollars, but you're going to file them in a way that tells the state, yeah, we sold through Amazon or Walmart or Etsy or whatever. They paid you the dollars, but here's our record of the sales.
Yeah, you definitely want to report that activity.
Mm-hmm. And that becomes much more complicated for businesses selling across Amazon and other marketplaces, and also other lines of business, maybe through or other sales channels, through a Shopify as well, through a NetSuite, through wholesale and QuickBooks. If all you're doing is Amazon, easy enough. But once you add in some of that other stuff, corralling all that data and reporting it at one place, goes back to the operationalization of how do folks tackle this.
Who's using big words now, Ronald?
I know. I couldn't say it. I didn't want to come out.
Okay. So let's say that you figured out that you have Nexus, you're selling taxable stuff, you know your jurisdictions. The next question is, how do you actually calculate that correct tax rate, which we touched on a little bit. So there's three options typically. You have the manual lookup where you use the state websites, which is so painful and not scalable, would not recommend. You've got rate tables, which you download and match by zip or location. Still risky. Rates are changing, updating all the time. Taxability is changing. And then you have tax calculation software like Avalara, TaxJar, Sovos, Vertex, etc. So when do you think a business should definitely invest in a tax engine? Is there like a transaction threshold that you'd like to use?
No, we talked about this a couple episodes ago. To me, all these things are a function of cost. So businesses, even if you don't pay for software, there's a cost to having your CFO or your accountant do this. If they're going to do this right, it's not going to take them 0 seconds per invoice. That just means they're not doing it. So if it takes them 5-10 minutes to accurately assess this, do the math. Does that time cost the company $1,000 a year, $2,000 a year? And then go shop around and see, what does an Avalara, Vertex, Anrock, Sovos, Thomson Reuters cost? Great. And throw in there too things like tracking Nexus, because it's part of your sales tax motion. When you're doing sales in the jurisdictions, you want to track where you're selling into to make sure you haven't tripped economic or other Nexus.
Sure.
And so factor that time in as well. People should be checking that pretty often. So are you going to spend an hour a month doing that? What's the cost of that? Then go look at, again, what those providers like Avalara cost and see, great, they're going to charge me $2, $3, $4,000 a year versus the $5, $6, $7, $8,000 a year I was going to have to spend to manually do this properly. That's when it's, the no-brainer. So, but most folks, that's the, where we got to kind of get into the weeds of people need to, own what they're doing and look deep into this stuff, because they shouldn't just buy it just because, if
Yeah.
you're a big company doing 5 transactions a year worth $10 million a piece, maybe you're okay to just assess it manually because it's only 5, and even though you're flush with cash. But if you're selling 10,000 widgets a month worth 25 cents, that's different. It's a whole lot of stuff. And if something goes wrong doing it manually, the cost to fix that, you would have wished you would have had software in there.
Well, yeah. Yeah. Like maybe you don't necessarily need a solution if you're just a storefront that doesn't sell online and you sell in one specific place. But maybe, you're shipping all the way across the country every single day and it's becoming way too tedious to manage.
For sure. And even if your situation's super simple, like that one storefront, it still wouldn't hurt to look at some software.
Yeah.
If you're spending 2 hours a month, for 10 transactions or 10 filings or something, sure, you could do it, but you could also be doing higher value add stuff. And I've seen lots of companies spend $200-300 on, automation software, get massive value, because most of that, whether it's, Avalar's, Vertex's, TaxStars, most of them can track your Nexus and do some bonus stuff for you. And that just saves time and gives you something to build around as you, hopefully scale things up.
Mm-hmm. Words are always hard.
I know.
Okay. So another overlooked step is, how is the tax shown to the customer? On invoices, receipts, checkout screens, tax needs to be visible and accurate. So make sure that you're charging the right amount, you're displaying it clearly, and you're storing it in your accounting or ERP system. And in that vein, what's the worst example that you've seen, Ronald, of a sales tax line item? No names, of course.
Of course, I don't want to call anybody out. It's not just one thing. I've seen what I'm about to tell you hundreds and hundreds of times. Basically, just people put almost no information, so it makes the invoice really hard to tell what's being sold. Sure, they'll have a customer name on there and maybe an address and one line item with no real description, no real product for $10,000 or $100 or whatever it costs. Which is functional, right? The customer can pay that if they know what it is. But going back to the audit stuff, we got to have things prepped in a way to where they're audit ready. If an auditor looks at that, they're going to have so many questions. How do you prove the taxability of something that nebulous where it says nothing, So I've seen that a bunch where, again, folks don't realize what they don't know in the moment, but somebody's got to be able to corral these systems and tools and processes to make sure that come audit time, we've got our things very clean and very justifiable.
Yeah.
What about you? What have you seen?
I've seen a lot of that. I've seen, we just don't want to show the customer all of the tax on there. So we're just going to make it all inclusive, or we're going to feed the tax somehow into the individual line so it's all showing as one, and then put the tax amount at the bottom as 0. It's just very confusing.
Mm-hmm. And speaking of tax inclusive stuff, on one hand, the state wants their money. There's some flexibility in how you get it to and approaches you take. I've seen customers who will basically increase the price of their invoice to give their end user one flat price that includes tax, and they'll just pay the sales tax effectively out of pocket. Which, again, the state wants their money. As long as you're going into things eyes wide open, you know what you're doing. You can definitely approach this in a couple of different ways. What you don't want to do is be doing things blindly in a way that gives your competitors an advantage. That gives the state a reason to come look at you. So again, this stuff is difficult if you need help. Tons of resources, but be thinking about all these things because as we all know, everything matters.
Mm-hmm. Okay, I have a curveball for you.
Ooh, I love baseball.
What if the customer is exempt? You're still responsible for collecting and storing valid exemption certificates. No certificate, the tax is on you. So here's a tip. If you deal with resellers, nonprofits, government agencies, get those certificates up front. So, Ronald, do you have any horror stories about missing certificates and big assessments later?
Oh, yeah, for sure. I'm glad we're bringing this up because I think it's another misconception. A lot of folks think that the resale certificate, like being exempt, that falls on the seller. of the good. It's kind of their responsibility to be responsible for asking about it and all that stuff. And that's not entirely incorrect, but it's both parties' responsibilities, whether you're the seller or the purchaser. You're both supposed to be, in charge of the exempt conversation, making sure tax was properly assessed, properly paid, and properly remitted on both ends. So when it comes to that kind of stuff, the sellers, absolutely, there should be a process in place. Whoever's taking those orders, hopefully before you get the money, should be asking these folks, are you exempt? Great. For what reason? Give me your resale certificate. And once they get it, they should be looking at to verify the dates, the jurisdictions, the reason, make sure it matches. Because again, going back to the audit, the auditor, they're going to say, hey, show me this stuff. If it's not exactly right, they're not going to care. And if you don't have, the state's expectation is that you're going to charge and assess tax on every product where it's applicable. Your only defense for why you didn't assess tax and pay the state when a product or service was taxable is that certificate. So if you don't have it, you owe them the tax. That's another pretty big misconception, is that, well, it's no big deal. I'll just get it in the moment. It's like, well, depending on the auditor, may I have that option? You did a sale 2 years ago. Right. You've signed up with the state, registering to play by their rules. Their rules say you're supposed to get the certificate ahead of the purchase, assess its validity, store it, and then do the purchase. So folks really got to get this exactly right. But yeah, I wouldn't rely on the mercy of a state auditor. Y'all's goals are in confliction.
Yeah.
So just make sure you're doing stuff right. But yeah, horror stories, so many. I've seen it all kinds of ways where even nonprofit institutions, and I can't mention names, but very large universities that have healthcare departments that everybody in the world knows is exempt, they've gone and made purchases from their suppliers, forgotten to give the exempt certificate for that one specific purchase. This went to court. The state said, sorry, you have to pay. Even though so-and-so nonprofit healthcare university is a nonprofit, for that specific transaction, you didn't submit it ahead of time, you're not exempt for this, right? You didn't fulfill your requirements. So just make sure, where you're the buyer, you're the seller, that you are, following the state's rules to the T, because you don't want to have to wish and hope they're going to take it easy on you, because chances are they're probably not.
Yeah. Yeah, and it's really good to keep your records. I wouldn't recommend storing all of your exemption certificate in a filing cabinet in the back of some office, but digital records should be kept for everything. I think my personal favorite was one time I had one customer who was using Avalara's exemption certificate management program, and in there you can upload PDF copies of your certificates so you can view them, print them out, And this person was not given a copy of the certificate, but decided to make the transactions for their customer exempt. And so they had taken a piece of paper and wrote a resale certificate across the front of it and uploaded it. Like that was going to magically just be acceptable.
And this is, we keep talking about how to operationalize this stuff. This is where it all becomes difficult, because all these little parts and pieces, everything matters. And in the event of an audit, you're going to have a record of the transactions, have the resale certificate, the original copy of it, have to be able to prove all these things, show the line items on the invoice and how you assessed each one individually, and how you that conclusion. It's like, if you don't have systems or tools or processes in place, you're just asking for a whole lot more extra blood to be taken by the state than needs to be.
Yeah, I would say we could probably do an entire episode just on exemptions.
Oh yeah. And at some point, we both know some state auditors. Will have one of them come on and kind of talk them through from their perspective. What are they looking at? How do they get folks? And what are some things folks can keep clean?
All right, so let's recap what goes into assessing sales tax correctly. So 1, understand your nexus, not necklace. Know what you're selling. Determine taxability in each state. Map your customers' locations. Use the right tools to calculate tax. Display tax correctly on invoices, and collect and store exemption certificates. I know it sounds like a lot, and that's because it is, but that's what we're here for, helping to break it down step by step. So Ronald, if someone's listening and feeling overwhelmed, what's the one first step they should take today?
Maybe grab a bottle, get a plane ticket, run away. If that's not feasible, talk to somebody. I mean, don't definitely feel overwhelmed. That's a natural feeling. This stuff's a lot. But don't let that stop you from taking action. You don't have to do it alone. So if you don't know everything about sales tax, then talk to somebody who knows, more than you do. Place like tax, and we're here to help. Your accountant, your CPA, if you don't have one, your other colleagues, I'm sure know people who know people, ask around, how are y'all handling sales tax? It's a great way to learn some initial information. And as you kind of dig in, again, come back to us or an Avalara, Vertex, company like that. But there's lots of resources, but I would not do anything before talking to a few folks just to get a general feel. And then you'll take some action afterwards.
Yeah. Absolutely. Okay, so before I wrap up, why did the sales tax auditor bring a ladder to an assessment?
Why?
Because the rates went through the roof.
Oh, yeah. The rates, the fine, the penalties. Yeah, they came ready.
Yeah, absolutely. All right. So that wraps up our episode on how to assess sales tax. As always, if this raised more questions than answers, good. You're paying attention. Don't forget to subscribe, rate us, and share this episode with your favorite finance nerd. We'll be back next week with another deep dive into the wild world of indirect tax. Until then, stay wow. Yeah. Stay sane, stay compliant, and as always, keep it tax fun with Taxium. Do, 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 do.